Hello traders, in this video we're going to go over my swing trade with SPXL. That is an S&P 500 ETF. It's leveraged 3 times. So if the S&P goes up 1%, this goes up 3. If the S&P goes down 1%, this goes down 3. So this gives you the opportunity to make 3 times the return, investing less money, but you're also risking losing 3 times if it goes down. So you have to understand what you're getting into with this type of product. So we've been swinging this thing now since May in this account, and I also traded SPLG previous to this, which is a non-leveraged ETF of the S&P 500 with the Chase account, and we're extremely profitable overall since we've been swinging this thing. I think we've only lost 1 trade, and I'll explain that one in just a bit, but it wasn't a huge loss, but it was actually the maximum loss that we could lose on a trade. So, and that's an important detail. Again, we'll go over that in just a moment and what we changed in the plan to avoid that in the future. So we got in back here in May, and we've been riding the 50 MA, and then when it comes down, we get stopped out for a win. And that's been the idea, because this thing, the S&P 500, can really maintain a long uptrend above the 50 MA. You just never know how long or short it's going to be. But that's basically the thesis behind this trade idea. And that's the idea, is to follow that 50 MA no matter what the price does above it. So I'm using the candles to enter. I'm using the candles for my original stop loss, but then as the price closes above the 50 MA, the stop loss follows the 50 MA. So anyway, we've been doing that every time. And this previous, actually, it was 2 trades ago, we got in back here for the break of this daily candle. We added when the price came back down and didn't quite touch the 50 MA and reversed, and then we made money off of that add, and then the price went up, made new highs, came back down, looked like it was going to reverse on this candle, so added again there, but then lost on that add. But overall, this was the biggest trade we've had so far in the S&P 500 or the SPXL. And then the price came down and gapped down below the 50 MA, and we tried entering for the break of a daily candle here. And this was the one that, was a good lesson, because this was part of the plan when I took the entry, but I've decided to not allow this type of a trade in this trading plan. So what happens when I enter, when the price is below the 50 MA, is I have to keep my stop loss at the low of the previous candle that I entered on, no matter what, until the price is above the 50 MA. And that didn't happen. You could see it started to peekaboo through the 50 MA, but never closed, never got an entire candle over the 50 MA. So I was never able to move the stop loss up. So I had to keep maximum risk on the trade at all times. And then we got stopped out over here. So again, not a big loss overall, and I'll show you that on the spreadsheet. But what I learned was, I don't really like that entry, because I have to hold that maximum risk for a very long time. Whereas when I get in for the break of a daily candle, once the price is already over the 50 MA, my maximum risk is only on the first day, and then the stop loss gets moved up immediately on the end of the day and continues on, and the risk is reduced quickly. So that is something that I really prefer. So let's talk about when we got in on the current trade, and I'll show you my position and my stop loss and all of that. So you could see that the price chopped around a bit below the 50 MA. So I wanted to wait until the price got above the 50 MA, which showed some strength. That's what I was looking for, to tell me there was strength. And I got in for the break of the first daily candle after the price was above the 50 MA, after it closed above 50 MA. So that candle is right here. Let me zoom in on that. We got in, our position is 119.74. The high of this candle was 119.71. So I wanted 119.72. I got 119.74, not a big deal. And the stop loss originally was on the 50 MA, because the price was already trading above it, and the entire candle was above the 50 MA. So our maximum risk was, let's see, where was the price? I think 117. Let me just move this a little bit here. 117.15, and our position was 119.74. And now I'm going to unlock the platform so you can see where my current position and stop loss is, and we'll move it in place, because right now it's in place for last Friday. So 118.84 was where the 50 MA was on the last Friday. So let's just kind of look through this chart as the days progress and see what happens. So this was our previous high, was right here, our previous all-time high, 126.09. So as we move to the right here, we can see the price is going up, and it looks kind of extended because it came way down here, and it looks like I got in on an extended move. I don't think that kind of technical analysis works real well with the S&P 500. I think this thing follows a pattern pretty well when it gets above the 50 MA, and that's what I'm trading. So again, here is our all-time highs. We came away from that so-called extended move and broke out and made new all-time highs, and you might think, well, that's it, you should just get out because this thing is going to reverse after that. There's no way it can go much higher than breaking out through the all-time highs because it's so extended. Well, let's see what happens. So it goes up even higher, goes all the way to 129. Now it's starting to reverse, and okay, now it looks weak, and maybe it's going to come down and stop us out or whatever, but what does it do? It reverses again. It's making new highs again, and let's see where it is today. It came back down on this candle and immediately went up and then up and then up. And today it gapped up again. So this thing is pretty tough to beat. It's pretty unstoppable. But the thing is I don't really care about all of this. I just worry about where the 50 MA is, and that price action is just what moves the 50 MA. So let's see where we are today, 120.32, so we can move our stop loss in place. So as of last Friday, we were still at a loss. And as of today, we are we are profitable on this thing. And at least, I mean, relative to where our stop loss was, we've moved a lot. So that's a good thing. And let's take a look at the spreadsheet. Actually, let me show you my position. So right now, with 5 shares, with where the stop loss where it is right now, let's see, our original risk was 117.15, and we were stood to lose about $13 if we got stopped out on that same day. So right now we're at 120, I think 23, right? Let me just double check that. 120.32. So we'll see what a difference that made. So instead of being down 13, now we're up 290. That's not much at all, especially when you consider the current unrealized profit. Let me show you that. Let's go to my account real quick here. So again, it's only 5 shares, but our unrealized P&L from this trade is almost $100 right now. So my stop loss is at a place where I would only make about $3, but the trade so far, I could exit right now and walk away with $100. But why don't I do that? Because I'm trying to get in a good habit of taking advantage of these long-term trends. So let me show you what I'm talking about there. And this is why it's important not to trade your P&L, but to try to come up with a plan that makes sense based on what you're trading and just stick to that plan no matter what the price does. So let's look at the past here. So usually the trends last quite a long time, and you can see the longer trends here last about 3 months, and there might have even been a few longer trends. Let's see, back here we've got one from June, the end of June until September. So that's really, yeah, like about 3 months again. And of course this is the crash from the pandemic, and then before that, look at this trend. Let's see, from October all the way to the end of January. So I think that's about 4 months there. So you can see that this thing can give you some very long trends over the 50 MA. There's another very long trend over the 50 MA. So that's really what, another one there. That's really what we're going for, is we're trying to catch one of these longer term trends over the 50 MA and maximize the profit. So this thing has kind of gone almost straight up, which is a little bit unusual, but basically, it doesn't matter. It really doesn't matter. We're just going to follow this 50 MA and see where this thing takes us, and that's it. Every single day, my stop loss is going to go higher and higher. I might end up only making $30 or $40 off of this trade after the price comes back down, but that's okay because I'm trying to take advantage of longer term trends. Eventually, I will get into one of these 3 or 4 month long trends, and maximize the potential gains. And there could be some ad spots here as well, and that could make my P&L even bigger. So anyway, hopefully you get the idea. It's not about just chasing the current price and trying to get out, because I mean, what's to say that I didn't get out back here when it was pulling back, because that was the first sign of weakness, or maybe over here, you know. So no one knew that this thing is going to continue higher and higher. So instead of trying to chase it around, just have a plan and stick to that plan until the trade ends naturally. So that's what we're doing here. And I have a very specific written plan for trading SPXL that I do have available on patreon.com/tradingarmor if you're interested in that. As always, go into every single trade with a plan and stick to it no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.